Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Wednesday, the 14th of December, and today we have James Whelan. He's the investment manager, head of the VFS Group Global Macro Fund, coming out of Sydney. James, welcome to the show.
Top of the afternoon to you, Brian. I hope all is well. A beautiful day here in Sydney, mate. I hope you're doing well where you are.
Well, we've had a lot of rain in this part of the world. But before we get your insights, James, let's take a look and see how markets across the world look like, across the region, rather. So we start with the crypto markets. Bitcoin is at 17,773. It's up 3.63%. Ethereum is at 1,319. It's up 3.95%. Now, looking across to regional equities, we start with the Singapore Stock Exchange. The Straits Times Index is up 0.29%. Bursa Malaysia is up 0.45%. Shanghai is up 0.24%. The ASX All Ordinaries is up 0.62%. The Nikkei is up 0.77%. The Hang Seng is up 0.89%. And rounding up the numbers, we've got the Kospi, which is up 0.93%. Now, James, it's a sea of green today. Tell us why.
Getting the overflow from last night's weaker than expected in CPI numbers, so the inflation numbers out of the US, came in a little bit underneath where expectations were. Generally speaking, bad news is good news, means that the Fed won't have to aggressively continue to raise rates into a market which has already pretty much taken so much of a beating. So bad news, good news with the Fed. FOMC tomorrow as well. So coming off the back of those numbers means that that weaker than expected data means inflation. Means inflation is softening, which is great, not so high, which then means that interest rates don't have to be up as high as they are, which means that markets like that, because markets like lower interest rates. I do apologize for how long it took me to answer that. It's the end of a very long day, Brian.
And also, James, then the expectation then is pretty much baked in around a 50 basis point hike tomorrow.
Sorry, say that again. I missed that.
So
it's pretty much done. It's done. Yeah, it's 50 basis points. I don't see any other expectation of it being something different.
Now, James, I want to move on to something that is that investors have kind of lost sight of, but is very important: the story around Binance and liquidity concerns around them. Now, just to give a context of it, there appears to be Binance is suffering from a decline in liquidity. A report from crypto analytics firm Nansen indicates that Binance had net withdrawals of more than 3.6 billion from between December 7th and December 13th. So that's a very significant number. And obviously that brings to mind the possibilities around contagion. Could you give us a sense of what's happening here?
Yeah, and you're right. I think that with all the news that's going on with data and real financial markets, that a lot of the stuff that goes on the sideline hasn't maybe been covered as well, especially with China now sort of getting onto the headlines and that taking up a lot of the big pages that's going on. Yeah, Binance looks like they've got $3 billion worth of withdrawals that's come out. Also, some question marks coming up over their auditors. So Mazars seen as a red flag. Why would a company as big as Binance want to be using a small accountancy firm to do their audits? Interesting questions raised. People are seeing that as a bit of a red flag. I think that the contagion that's come over, especially since CZ, I'm not going to do his name, but CZ, the head of Binance, was the one that was the most critical of FTX. They didn't have the money where they said the money was going to go. He knew that they didn't have the backing. That sort of put them into the golden boy position, up on a pedestal, that they were running their book right, that they've got the liquidity that they need, that they were showing the proof of funds, which is a really important thing for a crypto company to do. They've shown it. Some people sort of think that there's a little bit of question mark over it. That's causing a little bit of inflation. Markets in crypto land are super skittish at the moment. The complete opposite of where they were during COVID. If there's a chance to get your money out, people are taking that chance to get their money out. Interesting. Myself, I personally have my money with Binance, and I think that everything is fine. So I'm not doing that. And it's only because I'm sitting here talking to you, Brian. But no, it's the way that I see it. I think that Binance is sound, is legitimate. I think that they're running a decent crypto company, and I'm happy to have my my small investments there and to hold it there. But that's just me on this one. However, markets are super skittish at the moment. Some wallets that haven't been opened in such a long time, in years, have been opened to start withdrawals as well. This is the oldest day one Bitcoin money that hasn't seen the light of day, has now been connected up so that it can be withdrawn. That's a big flag that's going on in the market at the moment. So pay attention to what's going on. But if it turns out to be nothing, then Bitcoin could be a pretty good buy in the long term. But look, that's not my area of expertise, unfortunately.
Now, okay, moving on to what you just said and the China reopening story, which is really dominating the headlines right now. What's your view on this? And give us a sense of some of the interesting things that's happening right now, including a run on Chinese bond markets.
Yeah, that's interesting. So we'll get to the bond market run as we sort of go through the timeline. Really quickly, Brian, I'll just give you a bit of a recap. First off, we saw the Chinese People's Congress, the Communist Party Congress, got together a couple of months ago. Effectively, President Xi is in charge for life, which is great, and well done to him on that as well. However, it does solidify his power to be able to do what he wanted. I was predicting that COVID zero would start to be wound back almost immediately after that. It wasn't. It took the protests that were happening in the streets of China, protesting the lockdown situation. The lockdowns actually got harder, and then President Xi, or the Chinese policy, did actually start to unwind. And we saw from the middle of November, the Chinese reopening has commenced. That's caused, first off, the daily case numbers are going through the roof. Excuse me. Daily case numbers are going through the roof. The irony of a cough just then is very funny. I could see that too. And the predictions are that case numbers are going to accelerate rapidly. The biggest annual migration of people in the world happens in Chinese Lunar New Year as everyone goes home. A couple of years ago, in early 2020, I was telling people a huge warning: watch out, because there's a respiratory disease that's going on in Wuhan. Wuhan is at the intersection of the Chinese high-speed rail network. Pay attention to what's going on there. It's going to spread like wildfire. The market's going to crash. Great call back in 2020. This one, I'm thinking that something very similar is going to happen. The numbers will not be accurate that come out of China. You don't trust them. There's going to be looking at maybe 70,000 hospitalizations a day that's coming up. However, that's all in 2023. That's a 2023 problem. Right now, the problem that's going on is that for the last few weeks, ever since equity markets have been rallying massively over in China because of the reopening, because you stimulate the economy, stocks go up. And here's the kicker: that the Chinese people who have had their money so deeply tied up in bonds during the lockdown and during COVID, a good safe place to have it, equity markets have been performing dismally. When the Chinese people decide to move an investment from one place to another, you really feel the migration. It's migration of money. Not only is Lunar New Year the biggest annual migration of people, but it's also, right now we're seeing that the biggest migration of money is moving from the bond market into the equity market. Now, what that's doing is that it's causing a liquidity crisis in Chinese bonds. Withdrawals have been stopped for some products. That's pretty significant as well. So there's a run on the Chinese bond market at the moment. So that's causing a bit of grief over in China as well. And I think that we'll probably, you do start to see some real panic again, maybe protests in the streets, protests at banks, protests at wealth managers, probably the next thing that's going to come after this one. But also means that bonds are trading much lower than where they should be. And investors might just want to have a look at Chinese bonds as maybe allocating to them as well, because there is a run on bonds that is being caused not by anything fundamental. It is being caused simply by the weight of money shifting from one place into the other. Now there's a reason, Brian, I'll just one last thing. I'm tendency to talk. I do apologize for that, but this is good stuff. Okay, so here's the thing. When the case numbers go up, and if there does start to be an unwinding of the unwinding of COVID zero, so if we start to see that there might be a few more lockdowns come in and might be more restrictions brought in, again at the beginning of next year, maybe after Lunar New Year, we're going to see that money flow back out of equities into the bond market, meaning that your bond purchase here or in around the next month or two will actually start to look really good. Bond prices go up, yields will come down. So there's a bit of money to be made there on this bond market. I'm sort of kicking the tires on it now. Don't rush in too far. However, for now, there is a run on the Chinese bond markets. Shouldn't be ignored, and just pay attention to what happens in that regard.
And James, it's a very interesting development that we should be following up on. Thank you very much for coming on the show. Thanks for your insights.
No problem at all. I hope you all have a great time. Stay safe.
Now, I'm Brian Fernandez, and we've been speaking to James Whelan, investment manager and head of the VFS Group Global Macro Fund, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. Please check out our website, www.biztech.asia, as well as our social media platforms. You can also catch us on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.